What's happening, everybody? This is Lance, co-founder of PH Capital Enterprises, where I basically present to the audience how to interpret data using price action. So, in this video, I'm going to talk about intermarket relationships and basically try to give you guys some insight into how the markets work and maybe some things that some things that I'll be looking for um, as we and continue throughout the post-pandemic world as well as the recession. So please stick around. If you haven't already, please consider liking, subscribing, sharing, or whatever you feel like doing or compelled to do when it comes to this channel. And I thank you guys for sticking around and supporting. So without any further ado, let's go ahead and talk about intermarket relationships. So just a quick thing. I'm not going to make this video super long, but want to give you guys kind of like a not chronological but a logical order of things with how different areas of the markets can impact each other. So understand that commodity prices are inflationary because it causes the price of goods to rise. So if cattle futures increase, and that's going to increase the cost of beef, so things like that. And so with that, interest rates rise in order to control that inflation. And then because the interest rates go up, that causes the bond prices to fall, but the bond yields to increase. So this kind of has like a twofold impact on the stock market or on stocks. Because the cost to borrow is more expensive, and money flows from because the cost to borrow is more expensive, money flows from stocks to bonds. So it's kind of like a risk on, risk off type situation. So money goes from the more the risk on assets, which is your equities and stocks and things like that, and it flows to a more risk off type assets like your bonds and stuff, something more stable. So understand that also the rise in commodity prices has a lagging impact on the economy. So the things that basically what I'm trying to say is, in one of the major things that you should take away from this video is, and this is not investment advice or anything like that. I'm just talking, but one of the major things that you should take away from what I'm trying to say is that the markets will bottom before the economy, right? So what that means is that the markets will start to recover before we see that at the point of sale in our day-to-day lives as consumers. So just keep that in mind. So with that being said, I'm going to be paying close attention to commodities, especially now. And so I wanted to check out a few commodities charts with you guys, just so you guys can see, what's going on as far as the trend in these in some of these commodities is concerned. So right now I have a feeder cattle futures, and you can see the pre-COVID level was right at 141 and some change back in February of 2020. And you can see that this particular one bottomed out in April of 2020. When the market took that big dip and with that initial reaction to COVID, along with the rest of the markets, and then it just kind of took off, and it's been holding this bullish trend ever since then. So on a month over month basis, since 2020, April of 2020, this particular future, so feeder cattle futures, have been increasing. So the thing that we want to see as consumers, and of course if you're an investor or a trader and you trade these types of futures, then you can profit either way. But from a consumer's perspective, what we want to see is for the price to start leveling out, which it appears to be doing so, or has been kind of ranging over the past few months But you already see that I have an alert here, just to let me know when the price kind of breaks that trend. And it hasn't yet. So right now, this one is trading between about 183 and some change and about 172. So about a 10-point range over the past several months. Um, so this is the type of thing that the Fed is looking at. This type of thing that economists are looking at is, are the prices of goods going down? Are the prices of goods slowing? Um, what's going on? So right now the trend is still holding, but like I said, it does look like maybe sentiment is starting to shift just a bit, but still just ranging. So, but really for me, until it breaks this trend and holds that break, then I can't really say that fetal cattle feeder cattle futures are changing and may come down. So let's check out what's this one? Lean hog futures. So you can see where this one is in relation to that February 2020 high, was around 68.25. Prices trading above the 50 and the 200 on the month-to-month basis. Got a double top happening here. So it'd be nice, if the price broke here. So, I might set an alert here, just so I don't forget. And excuse me if I said double bottom, I meant double top. So double top type situation there. So got that alert set there. You can see that the price of hogs has been kind of really volatile since COVID, and it's just been kind of ranging, not really growing or declining overall over the past couple of years, but still above trend as far as that April 2020 low, when COVID, when the markets bottomed and took off. So that's just something else to keep in mind. So what I'm getting at here is that perhaps as a trader you'd be able to get ahead of these things as far as a market turnaround if you keep a close eye on commodities. So it's my hypothesis that once these commodities start to really come down, then the markets will, equities that is, will likely bottom and start to take off. So um, let's take a look at live cattle futures. So live cattle futures has just been trading in this channel for a couple of years now, and I already have a couple of alerts set, just to let me know, whether it maintains this trend or whenever it breaks this trend, and it will at some point. And you can see it's headed toward. Looks like it may be headed toward that all-time high at 171 and some change. That may or may not happen, but we'll see. But I think this will kind of give some insight into some of the things that the Fed is looking for as far as economic data, like we had PCE and core PCE come out today. Those numbers were, if I remember correctly, those numbers were a little bit below expectation, kind of, sort of, but not super great. You know what I'm saying? And then CPI is coming up in a couple of weeks, I think. And then we have FOMC in a couple of weeks as well. So um, I'll be watching, commodities probably on a daily basis or a weekly basis heading into the rest of the year, just to see, get some insight into what the Fed may decide. And of course, these aren't the only, um, this isn't the only indicator, so to speak, to look for, because you want to look at prices across different sectors of the economy, but I'm just choosing commodities for the purposes of this video. So you can see that February 2020 high was 122.72, and the price, it has not, it just took off from there, and it has not come back down to retest this level quite yet. It did retest the first quarter 2019 levels and held from there. So once it breaks this trend, if it breaks down, I'd definitely like to see the live cattle futures get back down under 130, as a consumer. And as an investor, same thing, because this is a good time, I believe, to be investing in some undervalued equities at this point, just to kind of prepare for the eventual rebound in the markets. So one more that I want to check out, and that's corn futures, and you can see how crazy corn has gone since February 2020. Was trading under $400 in February 2020 and got as high as 824.5. And so for the most part, it was holding this monthly trend, but breaking the trend a little bit here. So we'll see how it closes out the month of December and the year as well. But overall, still that very bullish trend going on a month-to-month basis. So let me just take a look at the yearly chart for a second. Yeah, so year over year, it's been growing. So at some point, we like to see it start to level off. And so it's hit a supply level up here on the yearly chart. So pretty much above 700. Um, it tends to kind of sell off. So we'll see if the same thing happens for the year 2022. So I'm going to set an alert, just a just in case alert here at 700, just to just as a reminder in case it happens, so I don't forget. Um, all right, so set a couple alerts. Now I don't have to kind of hawk the charts for the most part, but yeah, so that was pretty much all I wanted to talk about with this one. Um, just wanted to give some insight again into those intramarket relationships and how one thing kind of causes a domino effect in different areas, or really all areas of the market. So you saw how a rise in commodities impacted interest rates and bond and yield prices and everything like that. And so it's important, whether you're a trader, investor, or just none of that, you just a day-to-day consumer. It's important to know how these things work, in my opinion, because even if you're not an investor or a trader, you can clearly see and understand, hopefully from this video, how these simple things can impact you at the point of sale. So the rise in commodities means you're spending more for the cost of goods that you have to have. You need food, you need water, you need gas, you need, et cetera, et cetera. So the markets impact your life regardless of whether you are a participant or active participant or not. You know what I'm saying? So I would encourage you guys to start, if you haven't already, learning about the stock market, learning about how it works and things like that. And not necessarily, if you don't want to invest, that's fine. If you don't want to trade, that's fine too. But at least you know. You know what I'm saying? And you can structure your life accordingly, right? You can kind of start to see things before they happen. But anyway, like I said, I didn't want to make this video too long. If you guys have any questions or concerns, feel free to leave them in the comment section. Shoot me an email, whatever works best for you. It's cool with me. And I will catch you guys in the next video.